The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. My pleasure to be here on Monday through Friday, 11 o'clock until noon. And thank you to our wonderful hosts. And let's hope we can keep up that high standard going into the 11 o'clock hour. So the Dow is down 53 at 17,655. S&P is down 5.70 at 2060. Comp Index down only 14 at 4,780. No, that's 60. That's 80, that's 60, that's 80, that's 60, 4760. The VIX is at 14.90. It starts getting back into that 15s, and the market will pull back, starts to pull back into the 1450s, market 1470s, market rally some more. Now this is going to be very interesting. So I'm showing you the E-mini here, down 550. That was a peak D-top at 2105.25 on the 20th of April. We were short. We've been short the Dow since then. Keep adding, taking away, taking little profits, getting back in trading position. The core position is remaining, and I'm going to explain exactly why I think that we have made some kind of a top that is more a top of shorter to intermediate term duration. In other words, it should be a few weeks going into June, and then we could have a very sharp rally. We'll see. And now what's very important about this is the weekly is just looking strong as anything with the MACD good, the stochastic at 83%. But it is now testing for the third week in a row the 9-period exponential moving average, which is at 2044. Keep that in mind. A close below 2043, 40. Let's make it 2042. This week, Friday, means that there should be an even deeper correction. And I've got ways of measuring it, etc. And on the upside, very simple. The break of the E-mini is above 2082, and that says, hey, this is really good action. That would be like a 300-point rally in the Dow. I'm not sure we're ready for that yet. I think it's coming later. Here's a 120-minute chart, made a peak C, should have made a peak D, and now we're pulling back quite sharply. It's going to take quite a bit to get it above at 2057.25 to get it above 2069.50. Needs to go to 2069.75 for a leg D, and that would say if it does that in the next hour and a half, 2 hours, I don't know how it's going to do that, but if it does, then I would say that by this afternoon, is that today? The 18th, by May the 18th. All right, by the 18th, we should hit 2072.75. Just trying to keep it as simple as possible. Get rid of this. Whoa, we don't want to cancel that. That'll be terrible if I had to lose all those 120-minute charts all notated. All right, here we go. We're looking at the QQQ series. The QQQ series is struggling. It's really struggling. At 106.34, it's in this dashed line, down channel. It must hold 106 point, it's at, right there. It's sitting right on the 9-period exponential moving average. If it closes today below 106, that says that the Qs are really going to be the ones that continue to lead us lower. Let's go on to, we want to go to gold. Gold was pulling back some. It's now having a very nice move. It's up 830 at 1282. I'm a little behind. Let me just show you. I think I can show you on this chart right here. Okay, this is the 10-minute chart. Oh, I remembered to do that finally. 10-minute chart made a peak D yesterday at about 310, I think it was, 340, sorry. And then we pull back down to trough A, trough B. On the way, we go with lower cases, trough A, trough B, trough C. This is the E-mini S&P 10-minute chart. Trough D has a sudden spike up, and that creates a trend line. It comes down, and you've got confirmation of this trend line right here. So we went down to a trough F at 2052.25, all the way from the 2069 area. And now we've tried to rally, and it's stuck within this channel. If there's a break to the upside between now and maybe 245, 310, somewhere around that, going into the last hour, and it goes above 2061, we might see a retest of this bounce to the 2062.75 area. So far, lower lows, lower highs. I wanted to do this only to show you the gold chart, GC. Yeah. Okay. Oh, what happened? Oh, I did the GCM 16. That's what happened. There was a left side, right side price time match to the high that was made on the bar, the 10-minute bar back on the 16th of May. What is the date today? 17th. That was yesterday at 1282. That was 20 minutes to 11 Eastern time. Went all the way down to the low of around about 2071. Ran peaks ABCD. Pulls back from that peak. Do you remember the Chapman wave? If you look for the left side, most obvious low bar, merely want to count each successively higher peak, and then it runs up to peak ABCD again, pulls back, and then spikes to an E. And where is that E? Just above that 1287.90 high that we were talking about. Sorry, 1282 high, talking about a moment ago, that was made on the 16th, and about this, just over 24 hours ago. And then it hits 1282.40. But wait a minute, it plummets back down until 5 o'clock this morning and goes to a lower low of 1270.10. And this is the gold track. This is the June, and it goes peak ABCD, pulls back sharply. I could have called this EF and alternate count GC. For now, I just don't see any reason why I should. Gold is acting quite well. There should be a little bit of a pop to go to a leg D. Doesn't have to, but I think there will be above 1283.60. And then we'll see what happens. And now what's very important about this is that gold is holding really well. High-level consolidation in the weekly chart after a peak E. This is very good. My thinking was that the dollar would hold well and just slowly creep towards the 95.30s and the 95.50 area. But instead, a little bit of a pullback today, down 18 cents and 95.39. I'm still thinking that gold, and now I'm going to include the crude oil, and I'm going to the continuous chart, is in leg E, above the 200-period moving average. It could go just a little higher to the 48.65. It's already hit our target that was at 47.45-ish, 43-ish area, and it's gone above that. Leg C in the weekly chart. But my thinking here is that crude oil is close to some kind of a digestive phase. Now, it wouldn't be short. I'm just saying a digestive phase, as perhaps the dollar holds a little bit better. But most importantly, if you're looking at the gold stocks and the silver stocks, they are really doing very well. I just want to go to PAS. I don't know when I last updated it. A D, and now it's gone to an E alternate count. Could be a B, but I'm calling it a D, and I'm calling it an E for now. Tomorrow, the Fed comes out with Fed speak. Anything could happen. So PAS is, what is PAS again? Pan American Silver. Huge leg up in the monthly chart. This is, you rarely see this. This is spectacular. Going from the 538 area to 1627, a threefold increase. That is very, very impressive. And that tells me that gold is in play. It tells me the dollar could have a bit of a rally, but that it should start to pull back. And that pullback could very well take in, I would put it this way, that if the dollar just moves up in a kind of a general way and then starts to stall, it should find some support. And then we'll be checking to see whether gold has a deeper correction or whether the dollar is able to sneak even higher. Let's just run these as we're going down. So crude oil right now, crude oil is up 45 cents. You've got the TLT, which was down. Now it's up 66 at 131.80. We'll be back straight after this break. Basil Chapman, Tiger Technicians Hour.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Just about the Berkshire Hathaway circus tent pattern. I look at this, it looks like a staple on the side. A staple on the side very much looks like the Head and Shoulders pattern. This is Berkshire Hathaway trading at 141.23, down 59 cents, Buffett's little baby. I think it was a Massachusetts company that he initially bought that was Berkshire Hathaway. And yeah, he grew it. There's no question about it. One of the great I wouldn't call him a market like a hedge fund. I would call him one of the great entrepreneurs, one of the great business building influences in the country. Now something's a little different, because if you're looking at Berkshire, it made its all-time high at 152.94 back in December of 2014. It's made this cup formation. The candle that we're looking at now suggests two things. One is that at 141, if on a monthly basis it takes out 138, let's call it 136, give it 2 points for leeway. If it closes on a monthly basis under in the 136s, there's a real good chance that the stalling motion will continue even longer. If for whatever reason, by June the 20th to the 27th, late June, there's a move that takes it above 148.03, and it can actually close any month after, well, any month, May or June, above if it goes into the 150 area. Just make it simple. BRK.B, the B shares, going up, closing any month above 150. I would even say any week above 150 will be really bullish, and it will be retesting, not only retesting the all-time high of 152.94, but it'll be going even higher. But if there is a stalling motion, yeah, that's it. Hathaway Mills based in New Bedford, Mass. Correct. If it closes in the 136s, May or June, there's a good chance that you're going to have to make some kind of an H formation before it can rally even further. And this, I think, is telling us a lot about the market. The economy, the economy is moving along quite well. It's not great, it's not bad, it's medium. And therefore, you're looking at Berkshire Hathaway kind of representing that. But in the short term, this A pattern, this Eiffel Tower, straight down pattern, suggests that it will be testing the low that was made on the 7th of 140.27. It's less than a point away. That's what it looks like. And if it breaks that, then that weekly chart is going to start to become negative. Okay, but the technical so far quite good. Now let's go to a couple of things. Let me just get a couple of questions out the way here because I might forget them. RBM. What I'm learning here, and what I learned from, I'm starting to pick up from Andy Hector and his analysis of the oils, is that you've got to be looking at the different months, but I think that you've also got to be looking at the different contracts. And I've been getting emails from Julie regarding the different contracts, and every time I look, I see something a little different. So I have to say that I'm not even going to use the word expert. I'm not an expert. I can look at the charts and analyze the charts, but I do not know anything about the crude oils. I don't know anything about forward months, backward months. I did tango for a little bit years ago, and then we got to the merengue, but I don't remember the rules too well of anything, so I kind of extemporaneously moved along. So we stopped the dance lessons. So the contango is something else again. But what I am looking at here is that New York Harbor Blend stock, RBOB, June, broke the high that was made back on the 29th of April at 1.618. It's holding really steady here, and it's suggesting to me the stochastic at 84%, MACD is good, but not as good as it was before, that this is just saying to me, crude oil is making a high-level consolidation. It's got a pattern of higher highs and higher lows, and until within 2 weeks, by the end of May, we start to see lower highs and lower lows. We have to consider that the bias right now, even though it's in leg D, is still to the upside. So I hope I answered that question. I'm not even sure what the question was. Let me just double check. Could this hit 1.65 or 1.70? That's a great question. I think the 1.65 is definitely a target, but the 1.70, which of course is close to the all-time, well, not the all-time high, the most recent high of November, 1.7031, I have to go step by step and say the technicals are strong enough in the weekly to say, yes, it's a possibility, but I'm only going one step at a time. And the one step at a time says that the trend line resistance is at 1 point, it depends where it hits. If this upside wedge keeps going higher, then on the 20th of May, you've got a 1.66 target. So yes, I'd say that the 1.65 is much, I give more credence to that. But the technicals are strong enough to say it looks like it could go further. Okay, I hope I answered that. Next question is, I think I forgot a question yesterday and I was going to answer it today and I forgot to write it down. ULSD, ultra low sulfur diesel. Oh my God, I'm getting these questions on stuff that I never look at. I don't mind, it's just a chart. Here we go. I do. Oh, we looked at this. I do look at that. It's even notated. We're in leg D right now and it's looking very good. And it's a leg E in the weekly. So I'm going to have to do a little bit of thinking here for our dollar trade. It's still up, actually, the vehicle that we're using for the dollar trade. Because if crude oil and gold keeps coming back like this strongly and making new recovery highs, there's no way the dollar's going to tank, but it could pull back a little bit. So I'm going to watch that closely. Well, we've got to stop in place. But in the meantime, I have to admit that the HO is heating oil June. Heating oil, isn't that interesting that it's running like this? This is May. Well, what are they thinking? Anyway, I don't know. All I can say is heating oil leading today and resistance. Heating oil in the 120-minute chart is right here. Okay, we've got peak A, B, C, D. E, F, and it pulls back. A, B, C, D, E, A, B, C. So this is F/C that we're looking at. It can go a little higher. It's just becoming a little overbought in the 120-minute chart. So the question is, where can I go to? This is a real tough one because, it came straight down in the monthly and the weekly. There aren't too many peaks. The next peak is way up at 1.5165. Oh, it isn't so high. I think that 1.50 area is going to be the resistance area. And I think that that's where it starts the consolidation. And that's where the 9-period moving average might just cross the 200 period, and we could start to see some kind of consolidation. Hope that helps you. Okay. Now, Bob asked about APC. I'll do just one or two of those. I can't do them all. APC is Anadarko, I believe. Yep, Anadarko. It went to a peak A. Nope. You've got to always move your chart. You don't want to start your A just as well. So it goes peak, trough. Here we go. APC trading at 50.02. Here we go. Identify the lowest, most obvious low bar. You start your count. A, B, C. Takes a little bit of a dip, starts a brand new move and goes D. Then it goes to an E and an F. Starts a new move up and it goes A, B, C, D. There's the break. We've got a D in the APC and it's running. Oh, I'd like to do this one. It's looking quite good. So I'll be back. Basil Chapman, down 63. Remember, we're in a sell mode as far as I'm concerned. We should not make new highs in this move until we complete the down move. S&P's down 5.5. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we're back. Let me just quickly do this APC. And I need to ask, for those of you who send me emails while I'm on the show, I love doing them. It's just, it takes me to areas that I probably aren't looking at. It's great. But just try to make it the title of the email so that I don't have to actually open it. I can just read it right off like that. It's just easier for me. I appreciate that. Of course, you've got a lot more to say. That's fine. But anyway, APC made a peak F top back in 2014 in August at 113.51. And then it had a 2-bar Chapman wave reversal and it pulled back a little bit. It pulled back from the 13 area down to $28.16. Now it's trading almost double. It's at, well, not quite, but it's at 50.10. I like it. I think I treat it as a counter trend trade right now, only because at 50.14, you're really going to be looking for a bounce. It's going to take it to 55.47 for leg D in the weekly. If this continues to improve, the stochastic in the weekly needs to improve. It's at 73%. But I think you got yourself a trade here. I would start off a little small right now at 50.10, the high, almost the high of the day. But I'd try to start a little small here, and I'd put in another small position at about 49.30, using the 9-period moving average of 48.60 as a stop. And just let it go. Let's see what happens, because if it takes off from here in the next day or two, and that would mean that crude oil is probably going to go higher, then what we're looking for, and it's got an SAR, that we have people that look at that, the whatever the heck, I always forget what it's called. It's called parabolic SAR. And of course we have from California, Garrow, who always uses that, and it just broke out. There's your trade, Garrow, right there. And it looks like the leg B, and I would say this, we'll know within 2 days, because if in 2 days it's above 50.75, that's going to probably hold to make 49 the support, and if it takes out 48.60, that's something else. So I've done that. I'm going to have to move on. So here's the other question. Very good question. GT says, 2016 similar to 2000 or 2007. Soros bought SPY, puts, and GC gold having best run since 1986. Are we near an 87 type top next year? I've been discussing with some people not in the market, just completely separate altogether, other aspects in real estate, etc. And I have to tell you, I remember yesterday I sent off to my subscribers, I hope to be putting a whole package together for later this month, early next month. I've been trying to consolidate all these ideas. I needed certain parameters to be hit, and many of them been hit, so I can go to that area. I'm going to go there both politically, socioeconomically, trends watch, just everything that I can. I'm throwing to the pie here to discuss whether 2017 is going to be a major top. When I say major top, I mean a top where capitalism is attacked for years to come. Years, and you don't have that 18-month or 3-year consolidation and then go off to new highs, something completely the opposite. And I have to put that in the pie. In the meantime, I am anticipating that we're going to make all-time highs in the Dow. That's just when and how, that's what we're going to be discussing. But at this particular point, we're in a sell mode, and we positioned ourselves there, and it'll change if we go to a new recovery high, not an all-time high, just a recovery high above, what was it, 18,187 or something like that. Okay, so that's in the Dow. In the IYT, the question is, the IYT is the iShares of the Transportation Average ETF. Had a spectacular run from yesterday, 3 days ago. It's down at the 134.01 area, missed a round number by a penny. And lo and behold, this morning it's at 138.79. I mean, we're talking about 4 points. This is a major. That's big. 3.5% today already. It's up at it was over 2%. So at 138.27 up 258, something's going on that says there was a trigger for that, and it wasn't crude oil pulling back. I think it was the oversold action, because the weekly chart is still technically not very good. The MACD is holding quite well. It's got that porpoise look, that particular pattern right there. But the stochastic down is 71%, and it couldn't break above the 9-period moving average. So I'll be watching the IYT really closely. Remember, it took us from the very top back in November of 2014 down from 167 to the low that was made at 114.94, and now it's had a pretty darn good bounce since then. At this very moment, it's given back some of that, and it's trying to recover from the last 3 days, which is terrible loss. Well, the 2 days, Thursday and Friday. So, okay. So IYT is telling us that there's something there. we'll only know that if it's really there, if instead of being at 138.35, by Thursday afternoon, Friday is testing 139.98, the 200-period exponential moving average. Now, I said I would go to something. Basil, if IYT makes a leg B in the monthly, do you see it going a full move to make a leg D? Oh. That's a really good question in terms of if we were at all-time highs with that peak A. This is just a gray A. Let me make it gray. This means that at any point it can fail. Doesn't have to, but it can, because it hasn't gone to a new recovery high. If it was above 167.80, I'd say yes. I'm not calling that G. I'm calling that A, and that would be B. Or if it does that in this move, I'd have to say that is really positive, and we're going even higher, and that everything is intact to really scream to the upside for all-time highs. But I can't say that now. This is just a retracement. Not until you can break this barrier in the IYT, the iShares of the transportation average. That barrier is really strong. So the level to look at on the weekly basis is 140.70. You get to the 141s, the next level, major level, will be somewhere around 144, let's call it. That's a bit away, okay? All right, here we go. Now, there are a couple of questions that I was asked, but I'm going to do this because it pertains to exactly the questions. Within the context, let me just move this over here. Within the context of the Dow chart, this pattern that we're looking at that I'm circling right here, that you can see, I'm going to keep circling until I can find it in on the Tiger TV for myself. Yep, there it is. So that area where there's a down channel was replicated from May of last year to the November high of last year, replicated again with a smaller, less steep decline in the channel itself. Still this incredibly whippy area. Big question is, in this one here, I'm going to just for the moment, I'm moving this trend line here just to show you where the outside limits are, excuse me, where the outside limits are. But in the meantime, back at the range, I'm going to put it right back here because this is the one that is active. This is really the trend line resistance. If the Dow in the next 3 days screams to the eye, I don't see how it can, but let's just say it does, and it breaks above 17,900. It just trades even 1 penny in the 17,900s. Yeah, double air cup. If it trades there, I have to consider that this little, look at the length and the size and the depth of this particular decline. Look at this one before it broke down. And look at this one before it broke down. Look at this tiny little one. And that's saying to me, we're getting closer and closer to some kind of key support level. When you are retracing with Chapman wave, you do not need to complete wave D on the downside. Right. I'll be back, folks. Basil Chapman, Dow's down 63, S&P's down almost 6, and we'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Folks, we're back, and we're looking at a question about DB, and I keep looking at this. I keep saying I would not be touching Deutsche Bank at all. They still have that Volkswagen thing. It's going to sit there for a long time. Get it off your radar. In fact, it has a really good sharp bounce from the 1634 level it's at right now, down 3 cents. Goes to the 1750, 1785. I think of shorting it because they've got a real problem. I mean, VW, the sales are just, they were hot, and then bam, they're gone. I mean, this is real. They created a monster of a problem. All right, XLF. The XLF is the S&P Financial Select Financial Trust. And what it did is it went to a peak C and then fell. This is unusual. It can happen, of course, but it's unusual. It did do the exact price time match that I was looking for. We've been long it periodically. I think the last time we just took a small gain. It might have been a small loss. I just can't remember, but it was nothing really. Basically, it was a test to see if it would get to the D, and it didn't get to the D. That's really unusual, as I say. So I'm looking at this. There is a different way to count it. I could have used this and said that was A, B, that's C, D, E. It's kind of stretching it. I don't like to do that. I mean, there's a rule, so it's failing at C, and it didn't make that D that's in question. And that says to me that what the Fed does tomorrow, Fed's got an announcement tomorrow, it's going to be really important all round. And I think that they are under the gun because, you see, their problem is they probably should have, based on their methodology, raised rates about a year ago, just as a test. They probably could have even raised it again once or twice. But then it would start to handicap the economy. I'm sure it would handicap the economy. Not only that, you've got competition around the world for lower rates. When there's competition for lower rates, raising rates makes you an outlier. I don't know. And the U.S. economy, I think, is improving slowly. There's just enough evidence to say it's not bad. You're seeing a lot of want ads all over the show. And jobs, I know I'm hearing good reports about better paying jobs, really good jobs that are being offered. I think that's part of this whole thing. So that's what's going to be that's what's going to be the realization will be that maybe it's not so bad, politically. The economic results that came out today is exactly what a politician should be using. President Hillary Clinton, they should just be pushing. Even Bernie Sanders should be pushing like mad, saying, yes, there is a recovery. It's slow, but it's there. You don't want to mess it up. That's the way they should be talking. Putting the Republicans into the situation of talking about different things within the economy, because you want to be as specific as possible, but the public really can't perceive these differences. The public has to hear just 2 to 3 words. No new taxes. You got to, or America Today, or whatever it is. Because more than that, you lose the gist of the conversation. And if I'm looking at the political scenario, what could produce a roaring bull phase, a phase that really brings in the public, brings them in, not out. They just keep going out, out, out. I suspect it has to be at least a 6 month. You get major tops are made within a 6-week period, from the period of absolute recognition to the period where you just day in, day out, you get the newspapers reporting bull market this, bull market that. People are moving their funds from conservative investments into the high risk. There aren't any sexy high risk areas now. Maybe it'll be commodities. Maybe that's what's going to do it. But there has to be a sexy area. There has to be an area where you go to a party and everybody's saying, did you buy? Oh, man, I didn't buy it. And now it's up at, I wanted it at 20 and it went to 50. I wanted it at 50, it went to 100. And now it's at 230. I don't know what to do. I'm going to buy it today. And I'm just going to hold it because that's what you got to do. So we're getting to something like that. But it depends on which sector it is. Okay? So how it's used politically is going to be very important. So I just want to throw that out because there are other things I want to discuss, but I don't want to waste time now. We're talking too much about politics. It's just a waste of time. So what I'm looking at right now is in the market, we've got areas, for instance, within the context of the PPH. The PPH is the Van Eck Vector Market Pharmaceuticals, the pharmaceutical index, made a peak F top in the last move in the daily at 61.12, had a very good rebound in the weekly and then failed. So at 57.22, down 10 cents, and that weekly came from, I lost my notation. Oh, that even included that crazy crash thing. All right, I'll do that during the break when I get a chance. But the monthly chart made a peak in. You got this incredibly long candle from August. Oh, that's August 24th. That's what it was. That August 24th smash to the downside went from, in the monthly chart, 74.57 to 45.23. I wonder how many people bought it down there. So I'm going to X out some of this and say, let's say that there was a lower than the last low of 55.69. So let's just put it somewhere around inside there. The realistic. The chart is the chart. I'm not trying to change that. I'm just saying, let's just be realistic on a practical basis. Well, the pharmaceuticals right now, let me just run PFE, Pfizer, made a peak F top in the monthly. It's got a hat trick top. I think it's done for now. It can consolidate sideways, but I don't think it's going to see the 36.46 high for quite a while. And the same in the weekly, same in the daily. Now what we're looking at is if we go to Merck, which actually was a way stronger stock at one point, and then started its decline earlier at 63.62, pulls back to the 46.47 area. Now it's at 54.28 in the monthly, just in a sideways kind of an asymmetric triangle. And the weekly chart failed after that B. It should be at the 57.40 level on the week of the 22nd of April. We went way down to 53.06 the week of the 6th of May. And here it is trading at 54.28. So I think it's just stuck. The pharmaceuticals, these leading pharmaceuticals are just plain old stuck. Give me another one. Offhand, I'm just forgetting about my pharmaceuticals. Merck, Pfizer, AstraZeneca, you got others. Well, I'll get back. I just can't remember. But these two are major ones, and they're consolidation. But wait a minute. Let's look at the PPA, which is where's my notation? Disappeared. All right. Power shares, aerospace, and defense, almost at the all-time highs. All-time high was at 227, February of 2015 at 37.86. Has an incredible move down to the 1600. What happened there? Gets cut in half on August the 24th. Comes back. BMY, of course it is. There we got them. Thank you, Peaky. Bristol Myers. You've got this W formation in the monthly of the PPA. What is it? At 36.94, down a penny. It is the power shares, aerospace, and defense. And they have been that has just been the sector that's been on fire ever since the president came into power. And if you recollect, we were looking, I suppose I was saying, gee, I wonder with this president whether the defense stocks are going to do very well. Do very well. Are you kidding? They've been absolutely the place to be. So this is a leg. I'm going to take a little time during the break and redo this one because I did lose the notation. But it is Raytheon. You've got a bunch of these things. Raytheon, look at that, acting so well. I'll be back and we'll talk about the good sectors as soon as I return. Basil Chapman, Tiger Technicians Hour. Dow's coming back, down 38. S&P's down 3.5. Not bad.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Folks, we're back. So crude oil 10-minute chart in leg E. The E-mini is testing the downtrend resistance right here. Look at that. Whoops, I didn't do it correctly. Click. ESM 16. Look, there's the downtrend resistance. If it takes out 2060, I'd say 2061, I think. But if it takes out if it gets 261s, it should test the high bar of the at 20 to 10 of 2062.75. Maybe then it'll make a D. We'll see. And there was one other thing. What was I looking at? Oh, gold. And gold is very interesting. I'm a little behind. No, it's the GC. I'm actually looking at the GCM contract. It did make that peak D. Remember we were talking about it earlier? The Chapman wave went to ABCD. There's that up arrow right there. I don't know where it went to. And then there's another up arrow right here. And it goes peak A, B, C, D, and now we're consolidating. So I just wanted to show those. Now we can go back to our story. And our story is that Raytheon has gone, I'm not sure whether to call this an F right now, an F, or even a brand new leg, leg B, leg A even. I'm just leaving it for now because we don't have a position. This is where I would just wait a little bit. I'd say a little bit of resistance there in the 132s. It's trading at 130.41, down 92 cents, and it's leg D in the weekly. But look at this. It's only leg C in the monthly. I try to recount it. Well, I could call it F/C. But everything about it is so strong. I'm just going to give it the benefit of the doubt for now. That's Raytheon. Look at LMT, Lockheed Martin. It goes to a peak C, and then it goes to a D and an E, and now it's consolidating. See, they're all in the same area. A lot of things are right here on the cusp of either breaking out to just really parabolically almost in this weekly chart of Lockheed Martin, leg F. Maybe I have to call it leg F. All right. Raytheon is F/B and Lockheed is F/B in the monthly chart. And I'm sorry, I can't believe I have a good friend. He works for Raytheon. He's the peace lover. He's the vegetarian, etc. And he's done fantastically with Raytheon. I mean, the irony of the whole thing. I always point it out to him. It's so funny. Mr. Peace Lover. Okay, TNT, and we've got that. And there was one other I want to look at. GD is General Dynamics. So it's got an alternate count, A, B, C. This is now leg D. So D in the daily, leg D in the weekly, and a pretty strong pattern so far with the Chapman wave stalk leg formation in the monthly chart. I have to tell you, there are a lot of areas that are holding up really well, and there are a lot of areas that just need time. They need to consolidate. Okay, so in the minute that we've got left, let me do this. I want you to look at it. I'll do this. AMZ, Amazon. This is the real Amazon. I think it's still going to a leg C to the upside and then a D. So it's still showing strength, and I think it will go just above 722.45. That'll be important. But if it breaks down without doing that and goes under 685, then it's taking a good time out. So that's Raytheon. I want to go to UTX. UTX is just, they're stalling. UTX is struggling. General Electric, struggling. Triple M, struggling. I think that this is the map that we've got, and I'm going to stick with it. So let me just go back to this chart before we wrap up. Don't forget, you got your swimming lesson. Today you go all the way through to Andy Hecht. I have to thank Andy. I've started to get into those different contracts of the oil. I'm listening to his webinar. It's really good. So here we go. The Dow is down 43. S&P is down 4. So far, this pattern is active. It does allow for another one quick spike to the upside. But if it takes out in the next 3 days, because of tomorrow's Fed meeting, if instead of rallying up 80 to 130 points, it actually pulls back, and we take out 17,512 support, this pattern says, we're in a different dynamic now. We're going down quicker. It doesn't have to go all the way, but it's going to be quicker towards the key 17,300, 17,200 area for me. That is absolutely imperative to hold. Hey, thanks for being here. Check out my opening call. I think you'll find it very interesting. I'll be back tomorrow. Have a great day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.